Bitcoin back to below 20. It got in the 17s. Does that mean that it breached the 19.5 support? And do you now believe that it's headed to the 13.5 support? And we'll get to equity markets in a second, but I think this is important because in the past, you're not really sure who's leading whom or which is leading which.
Right. I mean, obviously, correlations are very, very high here. The support level is not broken. It was obviously tested and tested very hard. It ranges down actually to about 18,500 based on a previous resistance level. Also, Fibonacci retracement levels are at play in here. And we're seeing some consolidation, and that's very natural right around a support level. You're seeing the same from Ether. And yet we assume that the downtrend will resume on the back of this consolidation phase. The downside momentum is still very, very strong on the long-term charts. That goes for not just Bitcoin, but also equities as well.
All right. The equity markets are in that respite that you talked about that we could get during the summer. Is that what you think, or only to be tested in the fall to new lows?
You know, I wasn't very impressed by the oversold bounce that happened. We had about 8.5% upside from the S&P 500 over the course of a few days, and then it just ends so abruptly. And that's really the character of the market this year. Year to date, we've seen these very quick, failed, oversold bounces. And that's a reminder, of course, of the bear market cycle that has a hold. And I do here, too, assume that negative momentum will take hold in the near term even. I expect that 38.15 support level to be broken decisively this month. And that would then put next support around 35.05. These are all based on Fibonacci retracement levels. I think they're pretty widely followed right now. And yet I would also point out that in terms of duration, we have a proper 6-7 month bear market cycle. But if you look back at how the indicators where they looked this bad, these periods were more like 12 months plus in terms of the bear market cycle. So I don't want to be premature in looking for that major low. We do suspect, based on the way things align right now, that September, October would be a very natural place to find at least an intermediate term low. But as of yet, we don't have indications of that.
Is there anything positive, and it would be negative, I guess, for the economic backdrop, but yields have rolled over a little bit, and we've felt comfortable under 3% again at times on the 10-year. Is that reflecting recession fears or slowdown, or could it be something that does the Fed's work for it and maybe takes away a series of 75 basis point increases, and that could eventually be positive, couldn't it?
It could. I think we're looking at more sideways than we are looking at lower from yields. If you look at the momentum, it had obviously been very strong to the upside, to the point where it got somewhat unsustainably steep. And now we've seen a loss of momentum, not really meaningful. You can see it in the slopes of the moving averages. Look at the 50-day moving average. It's flattening out. And that tends to be reflective of consolidation. We don't see a major loss of upside momentum there, however. And we'd also keep in mind that this pullback, while it's pretty modest, it does follow a major reversal of trend. It was a multi-decade downtrend channel that was reversed. So I think we have to assume that yields will eventually forge higher from this consolidation, but we're looking for the consolidation to be somewhat prolonged, even lasting maybe 3 or 4 months, just as those gains are digested in terms of momentum and also sentiment.